Welcome back to the Crypto's Key conversation. We're going to quickly jump into CoinGecko here. We're currently sitting at a $2.148 trillion market cap, sitting at 3.1%, was recently up to 3.3%. Looking at the top 10 here, we're sitting at Bitcoin at 43,170, Ethereum sitting at 3240, Binance Coin sitting at 467, Tether is Tether, Cardano sitting at $1.39, Solana sitting at 141, XRP sitting at 75 cents, Terra sitting at $84, and DOT sitting at 25. Jumping into the fear and greed index, so we're still sitting at a 24. As you can see, we've been in the fear and extreme fear range for, I want to say, a couple months now. So we'll see whenever things start turning around for us here and we start, gravitating into the greed sector there. So coming over here, obviously we talked about this already in previous videos, but there's been a lot of adoption that's been happening and a lot more, big institutions and companies coming out, giving their praise and awareness and acknowledgement to the crypto space. So right here we have Google cards to store Bitcoin and crypto report. The company has reportedly formed partnerships with Coinbase and BitPay to enable the new functionality. Google's digital cards might soon enable users to hold Bitcoin and spend fiat. The company has formed partnerships with Coinbase and BitPay to enable that functionality. It is still unclear when Google will start accepting Bitcoin for transactions. Right here goes a quote. Crypto is something we pay a lot of attention to, said Bill. As user demand and merchant demand evolves, we'll evolve with it. So obviously, you got like Apple Pay and all these different types of forms of pay with, the Cash App and all this stuff. You have Google Pay, so they got to keep up with the times. So obviously they got to start accepting and allowing this functionality for its users so they can utilize it, knowing that this is the future. So this is huge that Google's, jumping in on this. Also, we have Facebook owner Meta dives into the NFT digital collectibles craze. Social media group plans to enter hype-fueled $40 billion market for creating and selling non-fungible tokens. So coming down here, it says Meta is working on plans to allow users to create and sell non-fungible tokens as Facebook's parent company seeks to join the rush of companies trying to capitalize on the digital collectible craze. So obviously NFTs have been booming and it's been like all the talks when it comes to NFTs in the metaverse. So of course they're going to try to, come in here and set up their own shop so they can capitalize and make some money. Teams at Facebook and Instagram are readying a feature that allows users to display their NFTs on their social media platforms, as well as working on a prototype to help users create or mint the collectible tokens. Two of the people said that Meta has also discussed launching a marketplace for users to buy and sell NFTs, essentially a digital asset representing art or imagery that cannot be replicated. So as you can see, they're trying to jump on and literally get their own platform rolling so they can, kind of be ahead of this thing and really earn their, their portion of the market share there. So that's massive that, Facebook's jumping in on that. Also, we have the CEO of financial service giant Charles Schwab calls cryptocurrencies hard to ignore. We would welcome the chance if the opportunity presents itself from a regulatory standpoint, says Charles Schwab, CEO, on Wednesday. So coming down here, it says, during an interview with Bloomberg on Wednesday, Walt Bettinger said cryptocurrencies are hard to ignore and that in today's world, they are fairly significant. We have a lot of ways that the clients today can invest in crypto. What we don't offer is direct trading. We would welcome the chance if the opportunity presents itself from a regulatory standpoint. Coming down here, the tremendous void in the space today. There's a tremendous void in the space today for a firm like Schwab, said Bettinger, before pointing out that crypto's transactions costs and trading were exponentially high, as well as its spreads. So this is massive. Obviously, like I said, you have all these different companies, institutions coming out and really trying to get involved in the space because they see where they see the writing on the wall. They see where their space is going. This is the future. So this is just another positive. We got another positive here with 140 billion asset management firm considers launching crypto fund. So coming down here, it says investments from our firm Man Group, which manages almost 140 billion in assets, is looking into creating a crypto fund for its clients. The CEO Luke Ellis said during the Bloomberg's the year-end ahead event. It's something we're considering, he noted. There's an awful lot of ways of just sitting passively on crypto. You can just go buy the underlying. There's all sorts of ETFs and so on. We're not going to do something like that. He says Ellis sees interesting opportunities to apply its risk management skills and technology, like overseeing counterparty exposures, group-wide liquidity, and balance sheet risk assessment to provide a sort of risk control version of crypto for its clients. So a massive firm here that's jumping in because they see where it's going. This is massive, just more adoption. You know, it may not happen as fast as we like, but adoption is happening. You know, it's compounding on itself. And we're currently still sitting at a 2.14 trillion dollar market cap, and you see the adoption that's happening. So we are so early right now. So another positive here is, you know, Blockworks had tweeted, breaking: New York mayor to convert his paycheck in Bitcoin and Ethereum tomorrow. So as you know, we have, you know, a bunch of adoptions when it comes to, you know, different countries, different cities. You have Miami mayor accepting, you know, certain allocation of their income in cryptocurrency and Bitcoin. You have, you know, all these athletes and celebrities, you know, earning some money and earning, you know, their salaries in cryptocurrency. So it's happening piece by piece. We are so early here. So now, with all this positive that's going to the space with some adoption, I want to touch on some of the negativity that we really need to pay attention to. So coming over here, Cointelegraph had put out an article that said the SEC had issued $2.4 billion in crypto-related penalties since 2013. So coming down here, it says the Securities and Exchange Commission has issued a total of approximately $2.35 billion in penalties against participants in the digital asset marketplace since 2013, according to a January 19 report by Cornerstone Research. The report that says the report SEC Cryptocurrency Enforcement 2021 update found that the SEC brought a total of 97 enforcement actions worth $2.3 billion between 2013 and the end of 2021. So coming out here is a quote. It says, of the 20 enforcement actions brought in 2021, 65% were alleged fraud, 80% were alleged on unregistered securities offering violations, and 55% were on alleged of both. Another quote here says, given the SEC's continued focus on this space, in 2022, we may see further scrutiny of certain market participants such as DeFi platforms. So obviously DeFi has been massive. It's had tremendous growth, you know, the past, you know, year and a half. And a lot of people are seeing value in, you know, utilizing their digital assets, their crypto as collateral, so they can earn, you know, yield. They can lend it out and earn money rather than keeping their money in their specific fiat, in particular the US, leaving it in your bank where inflation's eating away at your funds. So obviously, you know, this is a cause of concern for our market because DeFi plays a huge role into, you know, what crypto has to offer. So coming over here, another negative. This is off of Bloomberg. Their article says crypto exchanges will face more scrutiny from SEC, Gensler says. So coming down here, it says crypto exchanges are set to be a primary focus of the U.S. Securities and Exchange Commission crackdown on digital assets in 2022. SEC Chair Gary Gensler said on Wednesday that he's hopeful that the trading platforms will take steps in the coming months to be more directly regulated by Washington's financial regulators. The additional scrutiny is crucial for crypto investors to get the types of protections they get when trading stocks or other assets. He quoted here, this is Gensler, he says, I've asked staff to look at every way to get these platforms inside the investor protection remit. If the trading platforms do not come into the regulated space, it would be another year of the public being vulnerable. So obviously on this channel, we cover a lot of what's going on with the SEC v. Ripple case. And with him saying, you know, we got to get these exchanges into compliance with investor protection, it's like, okay, with the SEC versus Ripple case, you're hurting those so-called investors that you're set out to protect, because those are thousands and thousands of investors, billions of dollars that were affected when Jay Clayton had dropped the lawsuit against Ripple back in December 2020. But, you know, now you're going to, you know, say, hey, we're going to go full steam ahead and start coming after all these exchanges that aren't compliant to protect investors. But you're on a train right now that's actually hurting investors and hindering the space with a lack of clarity and a lack of, you know, innovative regulation that allows this space to continue to be innovative and to continue to be prosperous. You're operating an SEC as the chairman and you're hindering our space. So now coming over here, when it comes to, you know, crypto exchanges, you know, being under the scrutiny of the SEC, it goes to when Johnny Deaton was talking about when Coinbase had said they were coming out with their lending product, and then they had tweeted. I'm gonna just read right here. It says when Brian Armstrong tweeted about Coinbase would be sued by the SEC over its lend product, and was told by Gary Gensler and the SEC would not accept meetings with crypto platforms, I tweeted Coinbase should stop being on the sideline, relist XRP, and file an amicus brief. But what do I know? And he's referencing this tweet here off his crypto law page here that says, in a virtual press conference today, Gary Gensler said again that his SEC Gov is coming after crypto exchanges in the near future. So this is a perfect example of the overreaching and overstepping of an SEC. So when it comes to the Ripple versus SEC case, I know there's a lot of people out there that don't like XRP, that don't like, Ripple, and they don't like the tokenomics of XRP, and they really don't see a future for it. Regardless of however you feel about it, this is a massive case that's truly going to set the foundation and precedence when it comes to this space. What do you think is going to happen when the SEC, what do you think is going to happen when the SEC beats Ripple? If they win, that just gives them more power to dominate this space, to overreach and overstep and overregulate the space, which is going to hinder, its innovativeness, its growth. We're here because we see where this future is. We invest into the crypto market because we know that it has value. It has staying power. This is the future. This is how things work. They solve a real use case. It has great utility that can change our lives, not just our lives in the US, our lives around the world. It's about being more inefficient in things that we do in our day-to-day lives, and the crypto market offers that. So this divide we have when it comes to, the crypto market, oh, I like Ethereum, oh, I like XRP, oh, I like Solana, oh, your project is this, your project is bad. It's like, okay, that divide needs to stop because we are one market. We need to band together, stick together, and stand up for what's right, stand up for our rights, and protect ourselves against the so-called SEC that's supposed to be set out to protect us, because they're clearly not here to protect the investors. Yeah, Ripple and the XRP community are the ones truly under the microscope right now when it comes to the SEC versus Ripple case. But in the grand scheme of things, this is for everything. If SEC wins this case, they're coming after everybody. They're already doing it. I just showed you. The 2.4 billion since 2013 has been allocated, has been, pretty much siphoned from the market because of the SEC overreaching. Yeah, some of the companies may have, been bad actors or whatever the case is, or may have made a mistake and, had to pay a certain amount of fines. Okay, that's cool. It's happening. They are coming after everybody. If you think your project is safe, if you think your favorite platform is safe, and you can't stand, Ripple and XRP, and you really don't care what happens with the case, you are sadly mistaken, my friend. They're coming after everybody. We got to support Ripple in this case and do everything in our power to stand up for what's right, because we are on the right side of the law. We are on the right side of history. We can't let the SEC win. With all that being said, I just wanted to bring out, some of the positives that was going on in the market. And then I wanted to talk about a little bit about the negatives. And that's just kind of my take and my opinion on kind of what's going on. But with all that being said, stay strong out there. Be safe.